Welcome back to the Teaching Tax Flow podcast, everybody. Today, episode 121. As promised last episode, the little teaser we gave you, we are going to look at farm tax and what that means for the agricultural business. So before we do that with our great guest who's joining us on this topic, let's take a brief moment and thank our episode sponsor.
This podcast is brought to you by Strategic Associates. Are you a high-income earner, real estate investor, or successful entrepreneur who is frustrated by having to pay $75,000 or more of annual tax liability? If so, Strategic Associates can help. Your first step to saving thousands, if not hundreds of thousands, is to contact Roger Roundy at roger@strategicag.net or by calling 801-641-2956 and be sure to tell him TTF sent you.
All right, everybody, welcome back to the Teaching Tax Flow podcast. Again, as you heard in the intro, you heard in the last show. If you didn't listen to the last one, you should go back after this one, of course. But I do have to give a little disclaimer here. We're going to drop a lot of F-bombs. We're talking about farms. Okay?
Oh,
so I had to get catchy with that one. But even really why you're here, right? Why are you listening to this show? Kind of ask yourself that question kind of deep down. Why am I here? Why am I listening to a tax podcast that's talking about farms? Because you really want to bring home the bacon. Sorry, I couldn't help myself. It had to be cheesy. And this episode may be completely packed with the cheesiest jokes. We're not going to talk about where cheese comes from because
we're talking
dairy
about
farm.
farms in Wisconsin there?
We're going Wisconsin maybe. But in all seriousness, this topic is super interesting to me. And of course, it's interesting to Chris. And what really intrigues me more about this one, too, is I think for once out of 120 plus episodes, I may know more about this than Chris does. So without further ado, let's jump into it. Chris Picciero, welcome back to the show, sir. How are you doing today? Don't get cheesy on me.
I'm great. And you know what? You have something in common with my dad. A couple things. One, you have the same name. Two, when you say a joke, you're the only one that laughs at it. Just like your last joke. And now I did.
You know what? You're forgetting though that I edit these things. I may add like a Saturday Night Live crowd just dying laughing at the end of this. But even more than both of us put together though, again, in all seriousness, we have to bring people on the show that know way more than we do. So how in the world actually did you find somebody, and then you can introduce them, that knows a lot about this and with taxes, right? Just not the operational side of running a farm.
Well, John, it's a prestigious honor to be on the Teaching Tax Flow podcast. And it's very rare someone comes back for a second round. And so we had to ask Kelly Bender to come back. She did an amazing job in a previous episode. She is a colleague of mine, does an amazing practice in Pennsylvania. And also, not only, we always say we have to eat our own cooking, which could be a farm reference also. Another, another four-letter F word, farm. But she and her husband have a farm, but she also has a ton of clients with farms. There are a lot of people out there, and this has been a topic that we've been wanting to touch on. So we are very honored to have her back on the show. Kelly, welcome back.
Thanks, guys. I'm happy to have a little bit of a moving conversation today.
Oh, I like it. And it's always good when somebody else brings the jokes, Chris. It's not just me. See, maybe the problem's you on this. Maybe you just don't think they're funny.
But do they qualify as bad dad jokes if I make them,
No, you just add credibility to this. But and Kelly, this is super cool, right? And I would say in all transparency, I had no idea that you even knew about this, let alone, obviously farming is a business, and with any business comes tax obligations, right? And requirements, etc. So, and this is great because we can just kind of shove Chris to the side a little bit, right? Like he didn't even need to be here. We can exit him off of this, but like, where do we even start this conversation? I don't even know. Like, open up the fences for us here. Open up the
what is
the
cattle
farm?
gates. What qualifies?
You guys are really trying hard with these jokes, so I love it.
We're scraping the bottom of the pen.
That's it. Well, sometimes you got to scrape a little shit. So
exactly, it's true. It's true.
So yeah, I am weirdly I'm a my husband's nickname is actually Onion. He's a man of many layers, and so interestingly enough, we have a couple layers in that. Yeah, we run this practice, and then also we live on a farm and we raise all of our own meat. So we sort of happened into the farming community, and then as we need to, I had to learn all the things about it. So yeah, that's how we ended up here. And what the heck is a farm? To just like break it down, everybody kind of fits it into whatever that box is. They say, okay, you grow something. And a lot of people traditionally think of farms as, we grow crops, right? We grow hay and wheat, and you see the big tractors on the sides in big farmland. But in reality, a lot of people in the age of maybe homesteading, and even during COVID, a lot of people wanted to be like, kind of backyard gardeners, may have started farms because a lot of people can have sort of backyard or urban farms, and those are actually really popular now. So it's an increasingly popular topic to sort of talk about. And the word is broad. So farming basically is like having a farm is growing some level of of a product that is not, this is like the caveat, that's not then sort of manipulated for final consumption. So apples, farm. Apple pie, Schedule C. That's our big
Good.
difference, right? So we're growing that like raw product of some kind. One weird little exception is honey, because honey is like a product and it's the final product. So it's like the same thing. But yeah, that's a farm. So you're growing some level of product. We could be talking animals. We could be talking flowers, uh, herbs, fruit, obviously crops. That's like the big thing people think of. Eggs, all of that would be considered a farm.
Nice.
And it is wild too, Kelly. Like I've been, being from Michigan and moving back. So I live in a small downtown, but of a very rural area. And I think it shocks a lot of people how much you truly have to invest to have a successful farm, let alone the equipment is, makes a Lamborghini look cheap when it comes to that. So it's, and I'm not kidding. If anybody really wants to look that up, if you're not familiar with it, go try to buy a combine and see how much those are.
Yeah, big costs in equipment.
Definitely. We want to talk about some special rules for farmers. You mentioned Schedule C, and so farmers in general, they're going to file a Schedule F, I believe. But are some farms? I know this sounds like partnerships or S corps or C corps also.
Yeah, the larger ones frequently are. Family farms are a lot of times, partnerships in some way because there might be multiple generations that may own it. And so we do see a lot of partnerships in farms, and they have Schedule Fs, and then you create that and it transfers through to the individuals. So yes, basically all the farming activities get their own little caveat because of a schedule, because there's some unique rules that sort of break all of the other accounting rules and tax rules that we've come to know and love because of the unique nature of farming. And anybody that's spent any amount of time doing any level of farming, you mentioned expensive, but the other thing, which is just farming, we say farming's an analogy to everything. Farming takes a ton of time. And so it's not unusual for farmers to, of course, plant seeds in the ground and then wait a long time, sometimes over years to, generate. I mean, the average fruit tree takes like 3 to 5 years to,
Wow.
bear fruit. So you have a lot of time involved, heavy investments on the beginning, time involved. And so you get some special rules because of that.
So let's talk about some of the rules. Let's assume someone is filing on a Schedule F. So it's a either a married couple or one of the, someone could be single. Let's start talking about, do they what's their accounting method like? I mean, most people are what are called cash basis taxpayers. Can you talk a little bit about accounting method? And I know there's some special rules with income recognition.
Yeah. So the unique thing about farms is they're definitely generally cash basis taxpayers. However, what happens a lot of times is you may have like production of a uh, product that you don't take possession of the payment for a period of time because again with farming there's always some big time gaps. So with farming you really don't have to recognize that income until you take possession of it, even if perhaps the crop was produced at an earlier time, which is a little bit different than income recognitions that we normally look at for other businesses. And then the other thing that comes into play with income and timing and expenses and revenue recognitions is that when you have, say, like fertilizer, which is a common, right? I may put fertilizer in the ground, but then I don't recognize the benefit of that for, say, 2 years. I can actually take the expense for when I put it on the production of the ground, even though I may not take the income then for 2 more years. And so you can sort of disconnect, which is just one of those concepts that when we're in normal business world, we of course kind of have to match those things together. And farming, you don't, because again, there's this big time issue.
Now, in how about income? A lot of people have thrown around the term that you can income average. Obviously, farming is very dependent on factors beyond our control, weather being one of them, probably the biggest one. But yeah, what is there income averaging available to farmers?
Yeah, there is, right? This is like a super cool thing because we never really get to do that with normal businesses. So, because sometimes, yeah, weather plays a factor, droughts and floods and who knows, like all the different things that happen with farming, or maybe just longevity, you can income average over multiple years, 3 years usually here. And so, if you have like a spike year, you can sort of go back and look and see, hey, if I was in a 12% bracket for years 1 and 2, and then in year 3, I bumped up into 22%, I can go back and grab the rest of that 12% bracket and, kind of average out the
I don't know.
tax burden to because again, it's sort of like maybe it was a timing issue and you
Right.
had it's just really disconnected. Now it's of course a much more complex topic than that, but nobody wants to
Sure.
fall asleep on this. But yeah, the big thing is you can income average with
You can
farms,
income.
which is huge.
Let me ask this: that if let's assume you make an income averaging I assume it's some type of election. Um, do you go back and amend your previous returns, or do you take a look at the AGIs on those years and just kind of calculate, almost like in that situation where someone gets a lump sum social security amount, and you can look back at previous years. So can someone can ultimately look back in their last couple of years, and in other words, that adjustment's made on the current year return. You don't have to go back and amend returns. That's
That's correct. Yes, that's exactly correct. Yeah. So we're not like going back and amending priors. We're fixing that all this year.
Oh, wow.
hmm
Yeah, I mean,
Yeah.
there's a lot of planning opportunity there then, obviously.
It can. Yeah. So a couple things have to come into play. You kind of have to uh you do have to fall into some certain categories. So most of the time this applies to people who we qualify as sort of true, I don't know if it's a technical term, but qualifying farmers. And
Right.
that generally means these are individuals who greater than 2/3 of their income is actually derived from farming activities. And
Oh,
so it does prevent, sort of the hobby farmers, which do get some of the benefits. But if, say I have a corporate job and then I just happen to have a little hobby farm, I'm probably not going to be able to take advantage of that. So you do have to kind of meet some standards to get that qualification.
gotcha. And then, is inventory handled differently than maybe like a retail business at all, or is it similar?
Yeah, so, inventory in a farm is a little weird, right? Like I don't know, you don't really have to do it. Now, as I always say, just because you don't have to do something maybe doesn't mean you shouldn't, but you don't have to track inventory. You can really go on this real true sort of basic cash basis situation when you're looking at farming for most average farms. And so you're not really having to like track income or inventories. You don't have to keep track of what's, sort of sitting on your shelf. Essentially, if you buy it, it's an expense. If you sell it, it's income, whenever that is.
They must have realized that if they did really keep track of it, your inventory, if you're in livestock, could potentially just get up and walk out of Dodge. Then you got a shrinkage problem, I guess, right? Like, then well, anyways, I couldn't help myself. I had
Well,
to
no, I
jump in
mean,
there with that
what
one.
if you are, and I mean, in Michigan is well known for apple production. I know Washington's probably number one, but what happens if you have a great crop of apples, um, but by January it could be I mean, there's a lot of spoilage, right? There's a lot of those type things, and but I guess inventory. It depends on, I guess, what you're farming. What the useful life of the product is. So,
Right.
um,
So
now
for
you
that reason, we just kind of throw it all out the door with farming.
Yeah, no, that's good. Um, that's really, I mean, it makes life a little easier. And I'm sure with farmers, there are some special rules with, you know, home office deduction, and also deductions associated with, with their land, right? I mean, if you've got, I imagine there could be a primary home on a property and then acres of farmland. Eh, that's gotta, what kind of, because you really don't have that, the home office at 8829. I don't know. I shouldn't try to memorize this. Typically, if you have a home office deduction in your Schedule C filer, that just gets attached to your return. But if you're a farmer, you've got to kind of figure that out. What are some tips you can give someone? Um,
Yeah, so the cool thing is if you're a farmer, you can still take the home office deduction. And I always encourage them to do that. So it's there, it's still available as a home office. You can still take the home office. And a lot of farmers really do have very legitimate home offices. Sometimes they, have people come right to the house to buy the products. They might have a farm stand on the corner of the property, things like that. So they definitely have a lot of legitimacy for home office. It doesn't you get the deduction, but usually it's going to be, I think, in like an other expense section. And then you say kind of add a statement for C statement for home office. But yes, you do get a home office deduction for farms. So that's kind of cool. Mentioning, you kind of mentioned like we were talking about inventories and livestock. So there's some unique rules for livestock loss as well, because if you think about it, there's a couple different ways that you can look at what happens. So there's this whole and same thing. I don't have all these memorized, but like there's all these rules for, um, whether the animal was like born on farm or whether you brought it in, but then what happens if it dies? And, so again, you have to think about all of those things. And so that it just, kind of adds up, and believe it or not, there's a lot of keeping track. Like, my husband does all the calculations for everything. Now, of course, he's an accountant, so he does think like one, but I mean, he has spreadsheets for like every, date that an animal is born. And so then we, have it tracked and numbered so that you kind of know how many you should have. And then if somebody dies, and because it's like, unfortunately, that's just the way of life in farming is that not everybody makes it. And so, yeah, like all of these different things, you do have to kind of keep track of that in order to make sure that you get all the deductions.
that's a great. So, Mike, yeah, here's a. So, as far as livestock, right? It's obviously if it's born on your property, that's one thing. But if you were to acquire it, are there rules for depreciation? Any special considerations for that too?
Yeah, there are. So, right, because like you're right, if it's born on your farm, there's no cost basis in it. You're like,
Right.
you got a freebie, right?
Yep.
But yeah, so it's whether or not you can write it off, like when if you brought an animal in, whether you're gonna hold it then for production, and things like that, or whether it was born on farm, it doesn't have any cost basis, and those kinds of things. So yeah, it's definitely right, unique, super unique, because it's not like you're just you have to think about everything a little bit differently.
Right. So if you bring in a cow, I mean that's a fixed asset. I mean, this might sound like a really stupid question. So if you bring in, do the de minimis safe harbor rules apply to? I wonder. I wonder if they do. Think about it. But no, a cow's going to be more than $2,500, I assume. Um,
Yeah.
I'm trying to think.
It's a good
I don't know.
question. Crap, Chris, you stumped me. I don't know if it fall. I don't. I
No,
mean,
okay. It's
I can't even think of a joke around this one. I was trying to think of
no,
some.
I don't know.
don't have a cow over it. No, I mean, I'm just thinking. So you bring in these livestock. If they're for production, they're depreciable, but that also gives farmers a lot of opportunity to potentially use bonus depreciation, elect out of bonus depreciation. There's a lot of, and when we think about, about our practices in high end having the real estate, but with Tax Cuts and Jobs Act, it's really going to affect farmers' bonus depreciation big
Yeah.
time.
So one big thing outside of animals, but the biggest reason for farmers that has like a bunch, of kind of real benefits for a lot of people is really in, and John, you mentioned it earlier, this equipment is monstrously expensive. And so, a tractor, even a base level tractor, every stinking implement you got to add on the back on the, hitches, and everything has a pretty big cost because it has to be usually much heavier duty and all of that. So depreciation is a really big factor for farmers. And of course, we can utilize all the traditional things. So we can utilize, 179 or bonus. But there's a unique situation, and I want to make sure I say it right. So if you've got, uh, yeah. So when you have business use of a farm vehicle. Okay. So it's like another unique one. So, when we talk about cars, we're always like documentation, documentation, you have to have it. Um, Farmers can deduct 75% of their farm vehicle expenses as qualified business expenses without business record substantiation.
Nice.
I know.
I have a question.
So,
So that's a good, no, that's a really nice benefit.
mhm.
Wow. And it's interesting though, because you're thinking, well, Schedule C, Schedule F. Well, the advantage of Schedule F is something like that, and some of the unique rules, right? That you're getting on a Schedule F instead of a Schedule C. And now, our farmers in general, I mean, it, most I haven't seen too many Schedule Fs, and I haven't seen too many Schedule Fs with a net profit. So let's put it that way. But let's say, and they could be making money, but they just have deduction. I mean, they have equipment, they have livestock. Um, is that subject to self-employment tax? Like if you're actively participating?
It generally is. But one of the other cool things about farmers is that if you're where I said that qualifying farmer, right? So if you have 2/3 of your income generated from farming activities, then you can actually take advantage of a super unique estimated tax situation that is going to allow you to not have to make all of your estimated taxes. So, everybody who's self employed, we all have to make four a year. And, we love that, right? Four times a year. You get a special rule with if 2/3 of your income is coming from farming, you can make one.
Oh, that's nice.
So that's kind of cool. And it's either 15 days after the close of the year for an estimate or all of the tax by, I want to say, it's March 1st
Mhm.
for the whole year prior.
Wow.
So it's sort of a helpful thing also for going back to where farming requires a lot of cash, and there's frequently really big time lags between production and realizing the income and things like that. So this is just another way that helps like smooth the situation where instead of having to like part with four payments a year when you might only be producing a crop that harvests once a year, you can just figure it out and pay your tax once
Honey.
if you qualify as in that role. So that's kind of cool.
Wow. Now, do the typical hobby loss rules apply to farming, or because it seems like there's so much time goes into farming, and it seems like losses, it's very common for a farm to have a loss, even if it's making money, due to the capital, the intense cash intensive nature of it. Um,
Yeah, so I mean, it kind of falls into production. If you're endeavoring in a business producing situation, you're going after income, then even though you might have losses, you're not going to get hung up, in loss
Right.
situations there. So that is super common to see. You have to be actively trying to produce income, which again, with farming activities, you're usually looking at this over a long term. So I mentioned fruit trees. Uh,
Hmm.
tree farming is going to take a long time to produce a crop, right? Just because the nature of trees, like they don't grow overnight. So
Right.
you're not going to run into those same situations because you are doing something in that pursuit and you may just not be able to harvest for a very long period of time.
Right. It could be years and years that you're putting
Hmm.
into that, and it's just going to take a. And it could be there's no guarantees.
Yeah.
So
I mean, the average cow for us, because we raise grass fed, is 2.5 years to slaughter.
wow. So then for you guys, like in your farm, you are producing a cow, and then are you selling the meat? Obviously, or are you selling like whole cows, half cows to families, and that sort of stuff?
Yeah. Yeah. So we raise cows and pigs and
Hmm.
chickens and eggs. And yeah, then we have some other like smaller stuff, but some flowers, herbs, things like that. So yeah, like an instance of a cow, we would sell either like a half cow to a family, or we take it to a processor that will cut it into smaller cuts, and then we actually sell it to like an online farmers, or we through to customers through an online farmers market.
Wow. Well, that's cool.
Yeah, by the cut, but that's real specific. So in
Hmm.
our state, like you have to take it, you can't you can't uh, kill the animal on farm. You have to take it to uh, a USDA like observed facility and have it packaged, and like it has to fall into certain kind of weird rules. But yeah,
Well,
that depends per
Kelly,
state.
you'll have to give us any links too where you guys sell product at. We'll put it in the show notes. If you guys ship.
Yeah. So you put it, online. But yeah, there's just a lot when you think about it that's super different about farms. And but it's fun because a lot of people who are doing farming are usually not doing it for the money. They enjoy the um, freedom and, adventure of figuring out where the food came from. And it's hard work, but it's very rewarding.
Final question, I promise. So, so obviously we talked about Schedule F, some of the unique income recognition rules and expenses and estimated tax payments. Are there any other tax benefits that aren't income tax related that farmers might enjoy? For instance, is there typically, are you going to see lower property taxes or capped property taxes, agricultural exemption from sales tax, or any other things that you've seen that farmers enjoy a benefit of?
Sometimes, yeah, depending on the localities, you definitely can have some, kind of homestead or farmstead exclusions on their property taxes. Depending on certain states, they're going to be obviously more favorable to even the tax structures in state tax law, depending on whether they're trying to incentivize farmers. There's the farming world runs into, there's actually a lot of things with like grants and tax credits like at the state level. So, like our state, for instance, has like a beginning farmer credit that incentivizes the selling farmer selling to a new beginning farmer and incentivizes them by reducing the tax that they pay on that sale by selling it to a beginning farmer.
Oh,
So,
nice.
there's some like unique, you have to like, and there's programs you can apply to, but there's a lot of programs. I will say the most daunting part that we've encountered from a farm perspective is that there's so much that it's like it could be a full time job learning it. So, local USDA like resource centers, they're in every community, are a great place to start. Like that's where we kind of went and just started asking a bunch of questions because we were like, what do we not know?
Right, right, and I know there's right, from what I recall is in my limited CPE in learning about farming is that there's also some subsidies available because a farmer a lot of times they have to rotate crops along their line or they have to like let a certain piece of their property rest for lack of a better term and not farm on it, and there are some subsidies available for that as well. So,
Mhm. And then there's like things like crop insurance,
oh,
which is like a real unique thing. And so you have crop insurance. So a lot of farmers who do a lot of crops, they'll take crop insurance out, and then they get paid though crop insurance, but that's another one. It's actually a tax, like if you received it, then it's a taxable income.
Right. Wow.
So, it's like there's a lot of different moving parts that happen with the farms.
Wow.
Well, Chris, how do you feel about this? Do you feel like you went back to school today?
Absolutely. I
This
feel
was
good.
awesome.
Are you moving to a farm?
No, it would be an urban farm. No, but I'm very intrigued by it. I do have a friend that owns a farm, and he had a barn on it, and he ended up building an indoor pickleball court in the barn. So
Oh, good grief.
that farm I visit a decent amount of times.
He always finds a way to bring
I-
pickleball into this.
I was just going to say that, John, only because I know him. I'm like, I can't believe that you just took a podcast about farming and found a way to bring in pickleball.
You know what?
Shouldn't shock you.
It had
Shouldn't
to
shock
happen.
you.
But no, this has been amazing. And if if you are a farmer and have questions about your tax return I would definitely reach out to Kelly. I know that I've meant to say this in the beginning. Congratulations to you and your team. You just opened up a brand new office. And can you tell us a little bit about that? And I know you guys are all excited.
Yeah, I mean, it's pretty cool. About a year ago, we've been outgrowing our space for a couple years. About a year ago, we found an amazing old church that is literally about a quarter mile from our old, very traditional accounting office location. And so I saw a real cool vision when I walked into it. And we just had a big grand opening. We renovated the whole thing, turned it into this crazy, unique, open air office space with original stained glass windows that are 100 years old and original pine wood floors, and just like a super cool vibe. And we kicked off with our grand opening like literally just last night. So yeah, just jokingly like the Church of Money. So
Oh, I was gonna call it the Holy Grail of tax, but I like your name for it.
And so here's a question for you before we completely wrap this up. And I'll pose it to either one of you, right? Let's see if you know the answer to this one. So how do dairy farmers do their taxes? Any ideas? It's not a serious question, by the way. There's a disclaimer. Who do they go to?
there's a pun somewhere in here, and I don't know
So
what
let's
it
see,
is.
dairy. Well, it's got to be either something with they something about counting their cheese. I don't know, or their
They
cheddar,
milk it out of them.
or they milk out as many deductions as possible.
You know what? That's actually better than the one. So I was going to say they literally just go to an accountant, right? But I
Oh
like the
my!
milking out the deductions.
Yeah,
What? See?
and counting their cheddar, baby.
It's time to retire. It's time to go into improv, buddy. Let's do it. But anyways, well, Kelly, we will release you from this pen of torture, probably for joining us.
But yeah, the
Back
Splatterhouse
on here.
podcast here.
There you go. And Chris, I think we may have literally just like pun intended, kind of slaughtered our chances of having her back for a third time. So we'll just take advantage of this while we can. But honestly, Kelly, thank you for joining us on this. But thanks for having some fun with us too. This was awesome.
We didn't drop nearly as many F-bombs as I thought we would.
No, you know what? I'll go through the transcript. I bet you I can find a lot of them hidden in there. But this was really cool. It was honestly, it was great to, all comedy aside, to really dive into this and see, because it really, at the end of the day, right? It is a business, and it's one that, unless you're in it, you probably don't know exactly all that goes into it. And I almost guarantee that some people that I'm thinking of, not necessarily in the town that I live in, but they do have farms and they probably don't even know all this. So, maybe they don't take advantage of all this stuff. So we appreciate the insight.
Thanks, guys. It was fun.
All righty. Well, go enjoy the new church/office that you have there. And for anybody that's listening or watching this, we are going to embark on a 3-part series starting next week. I won't tell you everything about it, but we're calling it our ACE series. So ACE, it's an acronym for something, somewhat, but you'll find out pretty soon. So as we always close out with, we'll see everybody back here again next week roughly different time, completely different topic on the Teaching Tax Flow podcast.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.